YouTube, fellas, boys and girls, hopefully y'all came here to take some notes and learn some new things. If y'all, are new to trading and everything, or if you guys are some seasoned people in this game. But as y'all know, if y'all watched my first video that I posted tonight, I took some trades today, back tested, obviously, because we are back um, away from college, away from all those distractions, and I got some back testing done today on the way back. And I wanted to go over those trades in this video right now. Took one win, took one loss, and I'm going to explain to you guys everything, every confluence, every single thing that I know of why I won and why I lost these trades. With that being said, fellas, let's get into it. And these were taken on FX Replay, obviously, but I have screenshots of everything that y'all need to know. Boom, 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 boom. Boom. Okay, we don't need that right now. This is going to be a little pain in the ass. Actually, we can go right. As y'all can see, fellas, we are almost done with 2023 backtesting. Every single month of the year, and we're on December, final month. And then we can move on to the start of 2025. We did 2023 here, 2024, and we'll move on to 2025. That was my win rate, if y'all don't know, for 2024 backtesting. But that was like last year's knowledge on confluences and all that. Let me see how bright this is. That should be fine. But yeah, first, December 4th, 2023 at 10:39 a.m. we took a win. 2.5 R gained on this day, and the initial was 2.59 R. No partials were taken on this trade. I'm going to read this out and then show you all the screenshot of, the explanation. So, bearish bias today because a high time frame SMT on the 1 hour was present, pushing price bearish. With that on NQ, it had swept. So NQ had swept out all 1 hour highs, leaving London session lows to be taken out as the only draw left for the day. So I was waiting for us to start rotating back to the downside. I'm stuffy. Then when macro opened, price became choppy, and I'll show you on the screenshots. And stayed that way for a while. Then this choppy price action made a bunch of relatively equal 5-minute highs. So let's go look at that right now. I'm going to on my YouTube channel. Boom, y'all can see all that. Okay, fellas. So as y'all can see here, as I said, this is the high time frame. This is on the 1 hour. So as y'all can see here, this is the NQ high time frame. As you can see, we come up on NQ, sweep out this 1 hour high. As you can see on ES, 1 hour high, this 1 hour high. We do not sweep out this 1 hour high. High, low. This 1 hour high does not sweep this 1 hour high. Boom, creating a high time frame bearish SMT, formulating my bias. We can now, boom. Then I said, price became choppy when macro opened. Choppy price action, boom, boom, boom. And then obviously we entered our trade at 10:39, about around 10:40, boom, right here after the choppy price action. A bunch of relatively equal 5-minute highs were made. High, low, high, low. This looks like one line, but it's not. You zoom in, but I can't zoom in because this is a screenshot. Price comes up, takes out all of these relatively equal 5-minute low highs. Relatively equal highs on the 5-minute, which also was a 15-minute, boom, we're right here, a 15-minute high, hold on, oops, which is also a 15-minute high into a 15-minute bearish fair value gap, boom. So now with that being said, 15-minute, boom, 15-minute high, up, down, 15-minute high created right here. We come up, sweep that out, while sweeping out all of the 5-minute relative equal highs. and we filled this 15-minute bearish gap that was made right here, along with we'll get into that once I start explaining that later in this explanation. Here's a high time frame SMT, and here's a lower time frame SMT that we're going to talk about in a second. Oops, spelled that wrong. Where were we? Into a 15-minute bearish fair value gap. Then price came up, took out all of these lower time frame highs. Took out all of these lower time frame highs, and filled the 15-minute fair value gap. Then on the 1 minute, a bearish SMT formed, coming out of the 15-minute fair value gap. Then a break of structure to the downside on the 1 minute, which also made a bearish 1 minute fair value gap, which price came back up and filled, while also tapping into a 1 minute order block, breaker block. So I entered off the bearish candle close, which came right after filling all of these confluences. Boom. With all that being said, now we click on the 1 minute screenshot. And as you also can see here, this is where the 1 minute bearish SMT was made. Let's see if I can zoom in a little bit. We have down candle, up candle. This is also a bearish candle, but there was no up candle after this bearish candle, so this would be the low that breaks the structure of to change order flow of this price action. Boom. We get a break of structure down, creating this fair value gap here. Boom. It starts right here, ends here. Fair value gap. We push up into it, creating this big leg down. While we push up into this, order block, breaker block. And if y'all don't know, the breaker block is the series of candles before the up move that creates the break of structure downward. And that's the opposite for, obviously, a bullish order block, breaker block scenario. I'm going to make a video about order blocks and breaker blocks soon. Just comment down below what type of confluences y'all want to hear about in the new series coming up, for sure. So while we're retracing back up into this bearish fair value gap, we retrace up into the order block, breaker block, and we broke structure. So I entered right here off the bearish candle close of that move, and yeah, fellas, boom, boom, boom. And as y'all can see here, we came down to about some of these choppy lows down here, but obviously you can't see them. I know exactly what I'm talking about because I took these trades today, so there were some choppy lows like right around here. We barely swept them, and then we came back up, and then let me see if I can point it out on the 5 minute. Oops, that's YouTube. So we break structure on the 5 minute, down candle, up candle, right? We come all the way back down. Oh, here it is. We shoot out these lows all the way down here. Boom. Part of these choppy group of lows. Then we come back up. Why, you might ask? 5 minute breaker block, order block right here. So price likes to seek out these areas of price action, balancing them back out, filling these confluences, and then delivering us to the draw. My nose is dripping right now. Yeah, so once we broke structure back down on the 5 minute, we never came to retrace back up, and sweeping these lows gave us just enough juice to come back up here, fill this 5 minute order block, breaker block, and then deliver us back down to our draw. So that is why we had that little mishap and rotation back up. And only confluences with my stop loss, right, we're right here, fellas. Stop loss at the low of the 1 minute SMT and the high of the 1 minute order block. Boom, boom, boom. Stop loss at the low of this 1 minute SMT and the high of the order block on the 1 minute. Order block, breaker block. Order block, breaker block. High of the order block, low of the SMT. Boom. And the high of the 1 minute order block. Boom, already said that. And price push down. Then retraced me back into negative profit, but it only came back up to retrace into a 5 minute order block, breaker block, like I just explained to you guys. So this was a very good trade for for this using a bunch of confluences and my knowledge of the market to capitalize on this move. Make sure to give you guys, make sure to give yourself some props, guys. Winning trades, losing trades, whatever it may be. But oh my gosh, oops, burped. But yeah, fellas, that is it for my win today. Now it's time, keeping it fully transparent with y'all. I made a video last time and I lost 4 straight in a row. Obviously, over the year, I'm going to be profitable. But now I know, I mean, what was it? God, I don't even know. Well, I think I searched it up. Yeah, here we go. November. November was a bad month for me, and maybe, we can look here. November of 2024 was a good month for me. November 2023 was a bad month. So now, November 2025, we can, compare, contrast, all that stuff. This is why this is perfect. We can look at all of our past mistakes, past trades, everything like that, fellas. And, learn from them. But now, on to our second trade. December 6th, 2023 at 10:10, we took a loss. Minus 1R gain, but the initial was a 2.2R and no partials were going to be taken. And I spelled bullish wrong. This is going to be a long one, fellas. Make sure you explain everything, why your trade failed, why you think it failed, and all the confluences you use to lead you up to your bias that ultimately, makes you lose the trade, so we can learn from our mistakes. Bullish bias today because on the weekly time frame, price has retraced into a weekly bullish fair value gap, and on the 5-minute, price had just swept London session lows, making me very bullish for this day. Then on the 5-minute, a bullish fair value gap was formed that price retraced into and filled, and then a 5-minute inverse fair value gap formed along with a breakup structure to the upside, giving me plenty of confluences to go off of. And at this point in time, there were no bullish SMTs pushing price up or any bearish SMTs pushing price down. That's going to be important later in this explanation. But as y'all can see here, boom. This was the weekly time frame. And usually, this high time frame of a time frame, meaning the weekly, usually this doesn't go into my bias on like daily trades. I just happened to check it and figured there was going to be something. Just because of the way price was set up on like the 1 hour, I could when you trade long enough, you can tell, based off of like certain retraces and all that there's going to be something on the higher time frame of why we're doing this. And today we retrace into a bullish weekly fair value gap. Boom, 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 boom. Hold on, that's not what I'm looking for. On the 5-minute, boom, we get a break up, and then after that, we make a 5-minute bullish fair value gap. Boom, boom. We retrace back down into it. Obviously, we retrace again back down, and we see about a 5-minute low, which is also good. We inverse this 5-minute fair value gap. I feel like I'm stuttering, bro. Not stuttering. I have a lisp. Blah. We create an inverse fair value gap. Boom. We break above it on this candle right here. We make a 5-minute low, down, up, and then we sweep it. And we keep this fair value gap on the 5-minute. We keep it supported, meaning we don't break under it. And then we end up breaking structure up on this candle. Up, down, breaking structure above. This is clear sign of bullish price action. We're making a change. Everything that I've just said. And, if I didn't mark it out, but, you can tell from this low to, this low all the way up to this 5-minute high. We take out equilibrium within this range. Whether that's on the 5 minute, 1 minute, 15 minute, you can tell. We take out some sort of equilibrium on this play, and we keep bullish order flow whilst being on a 5 minute low. But yeah, that's basically what I just said. Boom, showed you the weekly, showed you the 5 minute. Boom, boom, boom. Oh yeah, wait, can we see? And we swept out London session lows right here. London session lows, pre-market, macro open right here. London session lows get swept, boom, and then all of these confluences come flooding in. Plus the weekly bullish fair value gap. Now where were we? Okay, so then I scale down to the 1 minute, and a strong break of structure to the upside had just formed, which made a bullish fair value gap that price filled. So I entered off the bullish candle close coming out of the 1 minute fair value gap. Fair value gap. Boom. Boom, boom, boom. From this candle, I know this looks weird. I know it's all fucked up. This one, 5 minute confluences, and this red line 5 minute break of structure. So from this candle's wick down here, all the way up here, 1 minute fair value gap, right? We come down, big bearish candle. We fill this entire imbalance of bullish price range. Then we come down into this order block, breaker block. In this scenario, like I said before, this bullish candle is our order block. This is our This bullish candle is our breaker block. This bearish candle, two bearish candles are going to be our order block. Okay, fellas, we retrace. Obviously, 1 minute equilibrium. Again, I didn't mark it out, but we hit 1 minute equilibrium inside the fair value gap, inside of the order block, breaker block, and we break 1 minute structure. So I entered right here on this candle. I know it shows here, but I entered right here off the bullish candle close coming out of all of these good confluences. And my stop loss, let's read. Boom, boom, boom. Where were we? Right here. With my stop loss at the bottom of the 5 minute candle that made the 5 minute fair value gap earlier to support price action. And my target, hold on. This was the bottom of the candle that made the 5 minute fair value gap earlier. Boom. The bottom of this fair value gap in between this candle and that candle. This is the bottom of the candle that made the fair value gap. Boom. And my targets, where are we? Yeah, and my target was London session highs. I don't know why I didn't write highs. Highs, which was relative equal highs with a 1 hour high. So these were, let's see, yeah, boom. Up here, as y'all can see, boom, London session highs, 1 hour high. So they were very relatively equal. So this is very good for, a guy like me wanted to take longs because the draw to the upside is much better, and a bunch of confluences supporting the reversal is a lot stronger. Meaning the sweep of London session lows and the fulfillment of the weekly fair value gap that was bullish. Boom, and it came up about halfway to my draws, as y'all can see. Came about halfway to my draw. And then came back down to stop me out. So obviously y'all can see I got stopped out here. Boom. And every time I get stopped out, I instantly am looking for a solution, a reason. And guys, 10 times out of 10, I have always found a reason for me being wrong in these markets. And I'm going to explain this one right now. And it's going to make perfect sense if you already understand confluences. Boom, boom, halfway, I draw something out. And the reason for this is because ES, the other index, NQ, ES, reached these draws faster than NQ did, which made a higher time frame SMT, which is why NQ stopped me out. So basically today, I chose the wrong index. Boo-hoo, you can't do anything about it. So I'm going to show y'all real quick. As you can see here, boom, nothing hit, nothing hit. And then we go to ES. ES came up, took out these draws. They weren't relatively equal on ES, but it came out and took out this first draw before NQ could have, which made a high time frame SMT. So, right here. ES, NQ. Boom. We come up all the way up here on ES. ES took out these draws, as you can see, when 8:30 pre-market starts. Boom, right here, right here. ES comes up, takes out these draws before NQ can, and we make a high time from SMT, and price ends up reversing, not in my favor. So, oh wait, I don't even know if y'all can see this. Boom, because of my camera. But yeah, boom, fellas. SMT, high time frame, ended up reversing on us, and I chose the wrong index. That's fully on me, and that's okay because you cannot be right every time you enter the market. Even if your bias is right, like today, my bias ended up being right, and price did end up reversing in my favor. Price did end up playing out in my favor, just not on the right index that I chose. And there are other factors that go. This shows that there are other factors that go into winning a trade. And if they're way ahead. Looking back at my writing in some of these trades is like I'm typing so fast because I'm trying to get everything out on my mind. But but even if your bias is right, there are other factors that go into winning a trade. And if there are delete that. And if there was another thing that I've talked about before, so basically, if there was a high time frame at the lows pushing price bullish, both draws would have been hit for both indexes. Let me explain why. Because after high time frame SMT is formed, pushing price a specific way, the opposite direction, so bullish to bearish or bearish to bullish, always, more times than not, will hit. We'll take out the draw for the day. So it sucks that there was no high time frame SMT or a bullish one in my case scenario today. But you live and you learn from trades like this. These trades are always good to take losses on because if you can explain to yourself why you lost, how you lost. When you can't tell yourself why you lost or how you lost or anything like that, that's when you fucked up. That's when you have some work to be doing. So I challenge you guys to definitely lock in on that because no one ever really thinks about that, guys. Whenever you lose, go back, type out why you lost, explain why you lost, and fully understand why you lost, how you lost in that trade. But yeah, back to explaining this. When there's a high time frame let's say I'm bullish for the day, right? If there's a high time frame SMT pushing bullish, right? I usually would be prone to entering lightly on both indexes because more times than not, in all of my time trading and backtesting, when we have a high time frame SMT at, let's say, the lows in this case scenario, because I'm bullish, both draws on both indexes will be taken out. So if I'm bullish and there's London session highs, Asian session highs, and they're like relatively equal, close together, I'm entering on both indexes because there's a high time frame SMT at the lows, and vice versa. If we have a high time frame bearish SMT, let's say on the 1 hour or 4 hour, and we sweep out London session highs and Asian session highs, or just one of the highs, and let's say that there's not even Asian session highs for that specific day. Let's say we sweep out some highs and we get the high time frame SMT on oh crap. Oh, sorry, I just lagged out. Yeah, let's say we get the high time frame SMT right on NQ ES, and we have confluences supporting both, that are both pushing bearish. I'm entering lightly on both indexes to capitalize on both of the moves, because when we have a high time from SMT pushing one way, the opposite of that, bearish to bullish, bullish to bearish, um, these are going to both move in sync now that a high time from SMT is pushing both of these confluences to a draw. So they're basically like-minded at this point. I've taken many trades in recent time that prove this. I would have to go back through all of these screenshots and everything to prove this. But at some point, I will make a video explaining this whole, because this isn't really, this is using confluences, but this is a different type of skill level and knowledge that I have of the market. I'm not saying I'm like fucking special, but I mean, like, over time you start to notice things, and this is one of the things that I have noticed. I'm sure other people do know about it, but I'm talking like when you just know the base level of confluences, there's other things that go into how these confluences work, fellas. So let me know if y'all understand what I'm saying here. But yeah. Well, one more time around, okay? Let me just, can I go on hold on, fellas. Nope. Brush. Boom, 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 boom. Boom, 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 boom. 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 Boom, 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 boom. ES and Q, fellas. Boom. Let's say this is 1 hour. 1 hour. Boom. We have a high time from SMT on ES on the 1 hour. Same for NQ, obviously, because they are both correlated. With this being said, let's say, here, let me just draw this out a little better. That doesn't look too, Okay, let's say London session, hold on, give me a second. What am I doing? I have a whole thing right here. Let's say London session highs, boom, are right here, right? Let's say these are Asian session highs, right? Boom, Asian session, London session, boom. Let's say NQ at this point. Let's just move all this shit down. And little Q. Boom. Let's say in this moment in time, NQ does not have Asian session highs, okay? And we have a high time from SMT, boom. High, low, high. High, low, higher, low, okay? It's a higher, wait, no, this is a lower high, I mean. High, low, lower high, and then boom. After we have this high time from SMT, I am looking for confluences that correlate to both, on both indexes, that qualify me for taking shorts. So whether this is on the 1 minute, 5 minute, 15 minute, mainly just the 5 minute, 1 minute, I'm looking for breaker structures, inverse fair value gaps being used, breaker blocks, order blocks, equilibrium, lower time frame SMTs, all of that stuff. I'm looking for all that stuff to be used, so then I can go short, boom, place it right here at these highs, or it'd be safer place them at these highs. And then on NQ, obviously you can just place it right here because this is the high of the SMT. So high time from SMT on both indexes, and we can go short on both indexes because they are now correlated in sync. And there are, let's say there are London session lows, Asian session lows down here. Boom, same thing for NQ. And we have draws to be taken out to the downside. Obviously, don't take shorts if there's no draws to be taken out. But I'm saying on a perfect day when there are draws to be taken out and high time from SMT pushing one way and there are draws that fulfill that SMT being pushed that way, take my word for it. You know, enter lightly on both indexes and, see what happens. I have won multiple trades like this plenty of times. There hasn't been a situation like this in like a while. The last time I can remember is when I first got to college. It might have been August, maybe. I'll have to go back through my screenshots, but hopefully this little explanation made more sense. Hopefully you guys got something out of this video. And hopefully y'all having a good night, fellas. Hopefully y'all took some notes, learned something. It's a lot of yapping in this video. Love y'all. Like, subscribe. Peace out, fellas. See y'all tomorrow, man.